Bitcoin has slipped below the crucial $74,000 mark for the first time since April, raising concerns about the broader cryptocurrency market. What does this mean for investors and the future of crypto? Let's dive into the details. Bitcoin's recent price fluctuations have sparked significant discussion among traders and investors alike. Following a notable drop, the cryptocurrency is currently navigating a critical juncture. If Bitcoin can swiftly reclaim its previous high of $74,000, analysts might interpret this decline as a temporary shakeout, a common occurrence in volatile markets. This scenario could trigger renewed buying interest, leading to a potential rally as traders capitalize on lower prices. Conversely, if Bitcoin struggles to surpass this threshold and lingers below it for an extended period, the market may experience increased selling pressure, triggering a deeper consolidation phase that could deter new investors. The backdrop to this volatility includes a broader economic landscape characterized by fluctuating interest rates and inflation concerns, which have historically influenced cryptocurrency valuations. Central banks globally are adjusting monetary policies, creating uncertainty that reverberates through financial markets. As institutional investors become more involved, their trading strategies also add layers of complexity to market dynamics. These large players often have different risk tolerances and can influence price movements significantly. The psychological factors at play, including fear of missing out and fear of loss, could further amplify price movements in either direction. The impact of this price action extends beyond individual traders, as Bitcoin's performance often affects the entire cryptocurrency market. A swift recovery could bolster confidence across digital assets, while a prolonged downturn might lead to skepticism and hesitation among potential investors. Looking ahead, traders should remain vigilant, closely observing key price levels and shifts in market sentiment. The next few days will be crucial in determining whether Bitcoin can mount a recovery or if it is poised for a more significant downturn. With market conditions shifting rapidly, the potential for a significant price movement remains high, setting the stage for critical developments in the coming weeks. To understand how we reach this point, we must look back at the recent trends in the cryptocurrency market. Bitcoin had been maintaining its position above the $74,000 level for several weeks, buoyed by a previous rally that saw it reach new heights. However, on-chain indicators began to signal a slowdown in momentum, suggesting that traders were beginning to lose confidence. This decline is not merely a reaction to external news, but rather a natural market correction after an extended period of growth. Over the past year, Bitcoin and other cryptocurrencies surged significantly, attracting both retail and institutional investors. As the market expanded, many embraced the potential for high returns, but this exuberance also led to inflated valuations. The lack of a major external catalyst for the current downturn indicates that the market may simply be experiencing exhaustion. Traders and investors are now reassessing their positions amidst this shift, weighing the risks of further declines against potential recovery. The current state of the market has prompted many to adopt a more cautious approach, with some choosing to take profits while others are looking for buying opportunities. The impact of this correction extends beyond individual portfolios. It raises questions about the sustainability of cryptocurrency as a viable investment class. The recent volatility may deter new investors and shake the confidence of those already invested. Analysts are closely monitoring trading volumes and market sentiment to gauge the potential for a rebound. Looking ahead, the trajectory of Bitcoin and the broader cryptocurrency market will depend on several factors, including regulatory developments, macroeconomic conditions, and technological advancements. Investors should remain vigilant, as the path forward may be fraught with uncertainty, yet opportunities for growth still exist for those willing to navigate this evolving landscape. The recent drop of Bitcoin's price below $74,000 has significant implications for the entire financial ecosystem. Bitcoin, often dubbed digital gold, serves as the benchmark asset for the cryptocurrency market. Its price movements are closely monitored by investors, as they often set the tone for altcoins, decentralized finance, DeFi tokens, and related equities. Historically, when Bitcoin experiences a downturn, it tends to trigger a ripple effect, leading to decreased liquidity and an overall diminished appetite for risk among traders. This current decline may indicate a deeper consolidation phase or a de-risking trend among both retail and institutional investors. The context surrounding this drop is crucial for understanding its potential ramifications. In recent months, Bitcoin had seen unprecedented highs, attracting a wave of new investors and institutional interest. However, such rapid ascents often precede corrections as market participants reassess valuations and long-term projections. Additionally, macroeconomic factors, such as rising interest rates and inflation concerns, can exacerbate volatility, prompting investors to seek safer assets. As Bitcoin's price falters, it raises questions about the sustainability of the cryptocurrency rally and the overall market sentiment. The impact of Bitcoin's price weakness is multifaceted. For investors, this moment is critical. The decline can put significant pressure on leveraged positions, potentially leading to forced selling as margin calls are triggered. Such dynamics can create a further downward spiral, impacting not just Bitcoin, but also higher beta crypto assets, which are generally more volatile. This environment may deter new inflows into the cryptocurrency space, threatening the overall growth trajectory of the market. Furthermore, the health of the cryptocurrency market can have broader implications for traditional financial markets and investment portfolios worldwide, as increasing correlations between these sectors become evident. Looking ahead, investors must remain vigilant as the market navigates this turbulent period. If Bitcoin can stabilize and regain upward momentum, it could restore confidence across the cryptocurrency landscape. Conversely, continued weakness may lead to a prolonged consolidation phase, prompting a reevaluation of investment strategies within this evolving sector. The next few weeks will be crucial in shaping not only Bitcoin's future, but also the entire cryptocurrency market's trajectory, influencing investment decisions across various asset classes. On May 31st, 2026, Bitcoin experienced a significant decline, slipping below the $74,000 threshold for the first time since April 2026. This decline, which saw Bitcoin trading at approximately $73,850 by 3 p.m. Eastern Time, has raised concerns among investors and market analysts alike. The drop is attributed to waning on-chain momentum rather than a specific external catalyst, such as an exchange issue or regulatory announcement. On-chain data revealed that Bitcoin's momentum has been stalling, indicating a potential shift in market dynamics that could have far-reaching implications. Historically, Bitcoin has been viewed as a resilient asset, consistently maintaining above key support levels for extended periods, which has fostered a loyal following. However, this recent downturn is particularly alarming as it lacks a clear trigger. In previous instances, sharp declines were often linked to specific events, from regulatory crackdowns to security breaches on major exchanges. This time, the market appears to be adjusting to a new reality, one that reflects broader economic conditions and investor sentiment. The impact of this decline is multifaceted. For individual investors, particularly those who entered the market during the recent bull run, this drop may translate into significant losses and heightened anxiety. Institutional investors, who have increasingly embraced Bitcoin as a legitimate digital asset, may also reassess their positions in light of this new market trend, potentially leading to a wave of sell-offs. Furthermore, a decline in Bitcoin's value could ripple through the broader cryptocurrency market, affecting altcoins and related blockchain projects that have come to rely on Bitcoin's stability for their own price movements and investor confidence. Looking ahead, market analysts suggest that the current situation could be a precursor to a more extended period of volatility. Investors are urged to exercise caution and remain informed about market trends and indicators. As the cryptocurrency landscape continues to evolve, the potential for recovery remains uncertain. However, many experts believe that renewed interest in Bitcoin could emerge as the market adjusts to this new phase, particularly if macroeconomic conditions stabilize. The coming weeks will be crucial for determining whether Bitcoin can regain its footing and attract fresh investment in an increasingly complex financial environment, shaping the future of digital assets. As Bitcoin's future hangs in the balance, will it recover above the $74,000 level, or is a deeper decline imminent? Share your predictions in the comments below and subscribe for daily deep dives into the world of crypto.